Welcome back to A Market Call. David Burrows is taking your questions today on North American large caps. Joseph is calling from Scarborough, Ontario. Go ahead, please.
Hi, I just want to know what you think the potential for BlackBerry is.
Thanks a lot.
Okay, so Joseph, BlackBerry. We own some BlackBerry. We bought a little while ago. Clearly, this is a company that has completely transformed itself and is a different company going forward. It's a software company. They have their software in a ton of automotive, the center of a lot of sort of new technology. We think that the stock can continue to trade higher. It has changed over its shareholder base, obviously, thankfully, out of the hardware business. We like software as a theme. So it is a company that we hold. I think that there will continue to be a turnover in the shareholder base, but it's gaining a following on Wall Street again, and there is opportunity for them to continue to grow. It's not impossible. Somebody will need to own their basket of technology going forward, and so I think at some point it could be a target for another company.
Okay. Marco in Brampton, Ontario. Go ahead, please.
Good afternoon, gentlemen.
Hi there.
I'd like to know about Verizon, if it's a buy, sell, or hold, and the dividends are safe.
You mean Verizon, the Canadian company?
Verizon, yeah.
No problem, thanks. As you know, it's being taken out by Pembina Pipeline.
So basically, you're just buying this if you buy it to hold and get the yield and get the takeout price. Look, we're in a pretty good market. I don't think you need to park cash to stay in cash and get just a simple dividend. I think there are total return opportunities that we can look at in this market that are going to provide better returns going forward. I expect the back half of this year to be a very strong year for equities. And so I think in some ways, if it's just a straight yield investment that you have, and we still have a little bit on the books, you're going to get paid, but I do think that there are probably better opportunities going forward.
We have an email from Prasad, wants to know about Snap. Let me know where Snapchat's going, please. And it's been trading back to its IPO price of around $17.
Yeah, it's interesting. Obviously, Snap, had this explosive open at $30 and is sitting back down at the IPO price. Okay, social media is a core theme in this market. There are some companies that are doing a great job at monetizing the viewership that they have, and so we own some Facebook. We own actually a little bit of Twitter over the last while, which seems to be making a nice turn. I don't like buying the weakest company within a group. Now, it has traded back to the IPO price. If it's able to hold here, build a little bit of a base and get turned around, I would take a look at it. Frankly, a great way to participate in the social media is to buy SOCL, which is the basket of social media companies.
That's SOCL. Okay, an ETF, SOCL.
Yeah, it's a great way to buy the basket. But frankly, if I was going to buy just one name, it would probably be Facebook.
Because that's the king of social.
Buy the leader in the strongest groups. Don't go to the laggard, hoping that it will be the next one to get going.
But you're hoping Twitter might come up with something?
Well, Twitter has made a pretty significant turn, right? And they have tremendous subscriber base that is of great value. Here's the thing. If a stock makes a low and then revisits that low 12 or 14 months later, which is exactly what Twitter did, and then makes a turn technically, very often that will be a sustainable long-term low in the stock. And of course, it rallied from 14 to 20. It's pulled back a little into the $17 level. Actually, the risk reward there is quite good.
We are going to take a break, and we're going to have David Burrows' top picks right after this.